Hello and welcome. I'm Sriyash Maheshwari and you are watching Last Tick here on News9, where we bring to you the day's action on the D Street. Now, it was a story of two halves for the Indian markets in an extremely volatile session on Wednesday. We opened gap up with both Nifty and Sensex scaling new record highs in opening trade. The broader markets were also seen participating in the up move, with both mid cap and the small cap indices also scaling record highs as well. Now, the tide turned in the favor of the bears by noon, by around 12:45 to 1 p.m. in Wednesday's session. The selling pressure intensified and bears were in complete control of the market. Now, the Nifty 50 index ended about 300 points lower, just at the 21,150 mark, whereas Sensex gave away 900 points and ended below the 71,000 levels for the very first time this week. It ended at around 70,506 sort of levels. Now, the bloodbath was worse in the broader markets. Nifty mid cap 100 dropped over 1,200 points, whereas the small cap 100 dropped over 500 points. Both indices witnessed their second biggest fall in 2023 in percentage terms. India VIX, the volatility index, also ended above 14 levels. This was the first close above 14 levels since March of this year. Now, among sectors, it was a sea of red. We opened in the green, all sectors were in the green, but by the close, as you can see on your screen, it was a sea of red when it comes to sectors. Media stocks among all were the worst hit. They fell about 5% or so, more than 5% in fact, followed by PSU banks, which finally saw some profit booking and ended about 4% lower. Auto, metal, realty indices also fell about 2 to 4% in today's trade. But to discuss that and more, let's also bring on board Mr. Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital. Hello, sir. Welcome to Last Tick. Always a pleasure speaking to you. Now,
thank you.
What are the factors that led to today's crash? We opened at a record high, but by noon there was an intense selling pressure and the markets gave away, over 1%.
Well, I think, if you look at it in the perspective of what has been happening, Indian markets have been moving up continuously. And, at some level, it was very clearly looking overbought. Some amount of correction, consolidation, profit booking, whatever name you want to call it, I think it was par for the course. And, I won't be too perturbed with this correction. It had to happen sometime. You can't keep going every day one way, up. At some point of time, there has to be some profit booking. And, honestly, this is actually a sign of a healthy market. A bit of consolidation at a little lower level, which is what we are close to by end of the day today, I think is good for the market. If you look at from the beginning of the month, I think market has moved up about what, 5-6%, and now we have corrected from there 1.5%. So not bad. Considering it's a December, considering the FII activity slows down towards the end of December, and considering that many people, many fund managers and market participants start going on leave, the market has not done badly at all. And probably this is an opportunity what a lot of people were waiting for in the sidelines for the valuations to correct.
All right. Interesting that you call it a consolidation, sir, because that was my next question, that today's price action, does that negate the bull run that we were witnessing since, a month or month and a half, or was it a one-time sort of a sell-off?
No, I think, look, if you look at month and a half, how much has the Nifty gone up? I think Nifty has gone up 5-6%, and the correction today is 1.5%. So it definitely doesn't negate what we have achieved over the last few weeks. Yes, it's a correction. Yes, it's a profit booking, and to my mind, it's a bit of a consolidation happening. Not a bad thing to happen. Market will start inching up again, but let's be clear that volumes are going to be low. Market participation by FIIs are going to be low for the next, let's say, how many trading sessions are left? 6-7 trading sessions are left. So these trading sessions may not be that exciting. Markets may not jump back to 25,500 plus levels. I think we have to be prepared for that. The excitement probably will come back in early January once again.
All right. And what do you make of this correction that we witness in the broader markets? Nifty, mid cap 100 and the small cap 100 witnessed one of the worst falls in the entire year. Does that indicate that, you know, the rally that we had seen in 2023, it's stopping off?
Not really. I think, nowadays there are multiple components to, when market corrects also. There are multiple algos with different stop loss levels. And when the stop loss levels gets triggered, there are basket sellings which happen. And my suspicion is that a lot of these levels got hit today, and a lot of basket selling did happen. That's the reason why we saw across the board selling in all sectors and all cap stocks. So we saw selling in large cap, mid cap, small cap. Of course, the mid cap correction was happening for last few days. We were probably ignoring that because there was so much of excitement in the market. We were ignoring, but mid cap there was selling happening in mid cap consistently over the last few trading sessions.
All right. And sir, before we, wrap these things up, what would be your message to retail investors on a day like this, you know, when we climb to record high levels in the first half, saw intense selling pressure in the second half? What would be your message to retail investors?
Well, from an retail investor, I think this is an opportunity which many of them were waiting for. Valuations have corrected. The sectors which are in the news, sectors which are promising, let's say power, let's say, construction, infrastructure, these are the sectors and some of the large cap names, BFSI, where after correction, definitely they can start accumulating. Now, the entire money they did not put on day one, which is, let's say, tomorrow morning market opens somewhere like this. They did not put their entire money. Maybe they can start putting money slowly in the stocks or sectors where they were planning to put, subject to valuations becoming reasonable.
All right. Put money when valuations become reasonable. It's just a consolidation phase that we are witnessing. That's the word from Mr. Sudeep Bandyopadhyay. Sir, always a pleasure talking to you. Thank you for joining us here on News9. But with that, it's a wrap on this edition of Last Tick. Keep watching News9.